What's up guys, it's James Allen, the out-of-state investor, and in case you haven't noticed, the stock market has been plummeting, there's been massive layoffs, and for whatever reason, nobody can seem to find any toilet paper. But with that said, in times like this come a lot of opportunity, and in this video, I'm going to explain how you can profit off of this fear, how you can make it through this recession, and also potentially make millions over the long run. But before I break this down, go ahead and smash that like button. And if you really enjoy real estate, finance, or if you just want to know how to make more money and build wealth, then be sure to subscribe and hit the notification bell to get notified whenever I post new videos. With that said, let's get started. More millionaires were made during the Great Depression than any other time in American history. So just let that sink in there for a bit. During the Great Depression of 1929, the stock market went down over 90%. The housing market crashed along with housing sales falling 80%, and unemployment in the US rose to 23%. And yet during some of the toughest times America has ever faced, there was opportunity like never before. I bring this up because while this may not be on par with the Great Depression, it's still a great time to be taking advantage of opportunity that's right in front of our eyes. So before I get into action steps, we have to look at the overall picture of where we're at today. For the past 11 years, the US economy has been in a huge bull market, seeing massive gains of over 400%. Many people have been predicting a crash for the last few years.
Some stocks in America are turning into a bubble. The bubble's going to come, then it's going to collapse.
So when is this going to happen?
Later this year or next.
But the reality is the stock market isn't going to crash just because it's overdue or because it's already been 10 years. There has to be a trigger that causes it to crash. The economy thrives when companies make more money, which then creates more jobs for people, along with higher wages, which then trickles down to the consumer level where people purchase different products or services with their disposable income. So you can see how everything is connected. Now, if one of these things fails, such as people not spending as much money, well then companies lose money, which leads to people losing jobs, and it can cause fear in the market and investors will lose confidence. And that's exactly what's happening right now, is that because of this crisis, many companies can't operate the same or generate the same revenue, which means they have to lay off their employees, which then leads to consumers who can't afford the products and services that they used to purchase. And fear is the single biggest component of what can drive down markets faster than anything. And once there's a sign of something going wrong, like with this crisis, it causes investors to lose confidence and sell their stocks. Then other people with their money tied up in the market get nervous and start to panic sell with a herd-like mentality. But with this fear also comes massive opportunity. And the savvy investor knows that this is the perfect time to take advantage and start taking action. So let me break down the best ways to navigate the stock market crash and exactly what I'm doing at this time. So the first thing you want to make sure you have is an emergency fund. This is essential because if you are well equipped with reserves, then watching the market crash isn't going to affect you the same way on an emotional level compared with someone who has no reserves and needs all their money as a safety net. Having reserves allows you to not worry about your ability to make it through the recession, but instead allows you to focus on how you can take advantage of the recession. So I recommend having at least 3 to 6 months of reserves to cover all of your living expenses. This way you're covered if you were to get laid off, lost some hours at work, or if you're an entrepreneur, maybe you might see less demand for your services. Either way, you're protected. The worst thing you can do is get involved with risky investments with no reserves or emergency fund. You can easily find yourself panic selling if the market keeps crashing. The second thing I would recommend to do is to invest into the stock market. The stock market has been crashing recently, and so now is the perfect time to take advantage of these low discount prices. This could mean investing in mutual funds, ETFs, index funds, options, or even in individual stocks like Tesla or Disney. Now, I don't have time to break down all these options in detail, but if you don't have a vast knowledge of stocks, then investing in an ETF, mutual fund, or index fund is exactly what I would recommend doing. Now I'm currently purchasing shares of VOO. This is a type of exchange traded fund or ETF that mirrors the performance of the S&P 500 index. I like ETFs because they can mirror an index just like mutual funds, but the difference is you're able to purchase or sell it anytime the market is open, just like an individual stock. You see, you can't execute your purchase or sell with mutual funds until the close of every day. I put a link to the website below if you want to open your own Vanguard account. The positive thing about investing in index funds versus individual stocks is you're not betting all your money on one company. Instead, an index fund is comprised of a number of companies. The Dow Jones, for instance, consists of 30 of the largest companies, whereas the S&P 500 consists of 500 of the largest companies, and so it's a great way to mitigate risks, since the likelihood of 30 or 500 of the largest companies going under is pretty much zero. The strategy I'm using to invest is called dollar cost averaging, which is just a fancy way of saying that I'm purchasing shares on a consistent basis. And so I'm not really worried about buying too high or too low, because over time it averages itself out. I'm also specifically buying on red days, which is basically any day the market goes down, I buy some more shares. I think the worst thing to do in a market crash is to assume that you can figure out where the bottom of the market is, because in reality, nobody knows what can happen, how low the market will go, and how fast it will move back up. You can completely miss the opportunity altogether by trying to act smarter than everyone else, sitting on the sidelines waiting for the bottom. So the best way to make sure you don't miss the bottom is to keep buying every week and dollar cost average. The third thing I recommend doing is investing in real estate. To those who follow my channel, this shouldn't come as a surprise, since real estate investing is my main thing. When the market crashes and times are tough, those are the best times to find great real estate deals. In market crashes, you're naturally going to see a rise in foreclosures, but also you're going to see a lot of motivated sellers who can no longer afford their payments or just lost their jobs, and they will be looking for other solutions to avoid foreclosure and destroying their credit. These are the type of opportunities that you as a savvy investor can take advantage of. You're solving their problem, helping them avoid foreclosure, and you get rewarded with a property purchased below market value. It's even better if you have cash or can use private money for these opportunities so that you can close deals faster. Bank financing normally takes around 30 days or more, so having the ability to close really fast with cash will be appealing for these motivated sellers. You can end up buying a $200,000 property for $150,000 and have $50,000 of instant equity while helping them avoid foreclosure. It's a win-win situation. But to clarify, right now I would avoid any house flipping at this point, mainly because we still don't know the outlook for the next 6 to 12 months, and if the stock market keeps going down, then that could start to affect the housing market, and you could easily find yourself in a bad situation on the house you wanted to flip. So the way I'm investing right now in real estate is I'm solely buying below market value rental properties. I'm getting more conservative in my underwriting to add an extra layer of protection, but if you're going to buy a house to flip right now, just make sure you have ran the numbers to make sure it will also operate well as a rental property, because holding costs can be very expensive, especially if you're using private money or hard money loans, and this can be a great backup option to protect you in a worst case scenario. Overall, the best way to look at this is from a longer term perspective. You're not going to become a millionaire overnight or even in 1 year, but if you take advantage of the opportunities and low prices that are available in the current market, you can find yourself getting huge returns. In fact, quickly looking at the past recessions, you'll see that from the bottom of the Great Depression, it went up over 350% in the next 5 years. In 1987, after Black Monday, it went back up over 87% over the next 2.5 years. And with the Great Recession of 2008, over 400% gains in the next 11 years. So you can see when you factor in compound interest over the years, it can easily take you from being an average Joe to a millionaire. It's not going to be easy, and there will be a lot of fear put out there by the media, but Warren Buffett says it best, and I'm pretty sure we all know this saying when he says, "Be fearful when others are greedy, and greedy when others are fearful." It's so true, and I want you guys to take advantage of the fear and opportunity that's out there right now. With that said, I hope you guys enjoyed enjoyed this video, please like and subscribe to the channel if you want to see more videos like this, and let me know in the comments below if you have any thoughts or questions, and I'll do my best to respond. Lastly, be sure to check out my Instagram page at The Out of State Investor. Thanks again for watching, and I'll see you on the next one.